There we are. And
I think I just have to share screen, right?
yeah, you should be able to right now. And Presley, I got your message and that's perfectly fine, huh? All right, everybody. So if you have not yet met Matt, this is Matt Brady. He's with Cornerstone First Mortgage, and he's going to be leading our call today to talk us through mortgages and loans.
Yep.
If you haven't had the opportunity to meet him, I do suggest that you, of course, reach out to him. He's one of our lender partners and has done some great things for our clients. So definitely do that.
Awesome. Well, thanks for having me. Can you guys still see me even though you see my screen? Or is the screen taking up the whole thing? Well, anyway, sorry, I'm working off two screens here. So if you see me looking to the side, that's on my laptop and this is on my screen.
You are in a tiny picture to the bottom, Matt, just so you know.
So the reason, not only at Cornerstone First, so I'll go through here. I'm licensed in North Carolina, South Carolina, Georgia, Florida, Indiana, about to be California, but I can pretty much help you and any of your borrowers or any referrals you have in any state. There's really only like 2 or 3 that we're not licensed in, so that's like New York and Hawaii. And the unique thing to me is I have a prior experience in the real estate industry as a licensed realtor in North and South Carolina. I'm also a certified mortgage advisor, meaning I understand that getting a mortgage is just more than pressing a button and being an order taker. I really want to make sure that your buyers understand the process, understand what they're getting into. So whenever you make an introduction with me to one of your buyers, I send over my homebuyer playbook, my mortgage roadmap. There's several videos on pre-approval versus pre-qualification, a little bit about Cornerstone First, how we come up with their interest rate, how we come up with their monthly mortgage payment. I feel like the more that they know about the process, the less stressful it is for them, and it makes your job easier because not every transaction is going to be without a little bumps here and there. But if everyone's prepared throughout the process, it makes the conversations that much easier and your borrowers that much less stressed out about the process. And a good thing to remember here, especially in this market, the best rate with the wrong strategy is much more expensive than a competitive rate with their certified mortgage advisor. So it's important when you're talking to your buyers that it's not only the lowest rate isn't always the best, but the lowest rate costs you the most money. So that's one thing to keep in mind too. Cornerstone First Mortgage, we're a 100% in-house residential lending team, meaning we control the whole process from pre-approval through the processing, underwriting, closing. So we have consistent, efficient process. We control the whole thing. We're a full service lender and we serve as both a mortgage lender and a broker. So not only do we offer conventional FHA, USDA, jumbos, we also underwrite in-house non-QM loans, which we'll go over a little bit more today, such as bank statement loans, DSCR investment property loans, and we'll go through a few different options in that. And we can then broker out no ratio loans and some other options too. So we can normally find something to get your person into. We can even go down to 500 on FHA as long as they meet certain other things such as 10% down, no lates in the last 12 months. We have a lot of options to get your people into homes. And that's what my last line says is we take a personal approach to the mortgage business, customizing a plan that meets a client's individual needs and goals. A little bit about the Cornerstone difference. So what we're talking about today is non-QM versus QM and why this should be important to you as a realtor. So a non-QM loan is a non-qualified mortgage, and it really doesn't meet the agency standard documentation outlined by the Consumer Financial Protection Bureau. So basically, a QM loan meets the standards set forward by Dodd-Frank and Fannie and Freddie Mac. Non-QM doesn't go down that route. It has different underwriting guidelines, and it allows more borrowers to be qualified to purchase a home, and in many cases increase the buying power of the borrower, which would be a great option for any of for all realtors to increase their buyer pool and stuff like that. Back up for a second. I think someone's trying to enter. So that's basically what non-QM is. It gets more people into a home because we can do different guidelines to get them there. So here are several examples of non-QM loans that we offer in-house, that we underwrite in-house. And that's why it's important to go with someone that underwrites in-house over a broker, because we control the whole process from beginning to end, which means we have contact with the underwriter and the processor. So there's a smooth transaction, especially when you're dealing with these kinds of loans that have different things that we need to go into. So the first one and the main one is the bank statement loan. This is going to be great for self-employed borrowers, 1099, realtors. So if you're trying to get approved for a home, or you have a lot of business owners, or 1099, we can go down to a 620 credit score. We can do 3 months bank statements, 12 months, or 24. So what we would look at is you'd send your or your borrower would send your bank statements over. We look at the deposits, use the ones we can count, take out the ones we can't count, and then you have an
Did we lose Matt? I don't hear any.
Hold on, let me change my. Hold on. Can you guys hear me now? For some reason,
Yes.
okay. So don't know what happened there, but we'll just continue from this slide. Now I'm back on my laptop. So bank statement loans will be a great option for people. We can go down to a 620 credit score. And I was saying there's no mortgage insurance if they put less than 20% down. This can be used on primary home purchases, second home purchases, and investment property purchases. So the reason why someone would want to go bank statement, they can't be a W-2 employee is the one thing. But say, they write off a lot on their taxes, which helps when you're dealing with Uncle Sam, but doesn't help when you are trying to purchase a home. So say you make $100,000 and you write off 50% of it, your taxable income that a lender can only use is that $50,000, not the $100,000. Bank statement loans let you use that $100,000 now, making you able to qualify for a bigger home or qualify for a loan that you wouldn't actually qualify for to go in the QM route. The next option, and really big option, with how everyone is trying to add investment properties. Now, I talk to a lot of people that are trying to get into investment properties. I did a post about this the other day, that 90% of your millionaires got to be millionaires through real estate. So this is a great option for people. The reason why so many people are using this type of loan is there's no income documents needed. You need a 660 minimum credit score. We can go up to 80% on purchases and 75% on LTV. What's going to affect that is your credit score and how much you have in reserves. We can go up to a $3 million purchase price, and you can go up to $750K cash back on a cash out refinance. And there's no limit on the properties you can own, and you can close multiple properties like this at one time. The one thing to keep in mind with the DSCR and bank statement loans is that it's a minimum $150,000 loan price. So we can't go under $150K loan on these properties. We would have to go conventional on that. I think someone had their hand raised. Karen, did you have your hand raised?
No, when I was trying to notify you that I couldn't hear you, I raised my hand.
Okay, perfect. So that's DSCR. The next one is your jumbo loans. So we can go to a $5 million purchase price. So a jumbo loan is anything over conventional loan limits. So
the conventional loan limits just got moved up to, I believe, hold on. They are now at 647,200. So that means any loan amount over 647,200, you have to go the jumbo route, or we can even look at a first and second. So basically, you get a first mortgage for the maximal loan amount of 647,200. You have your 10% down, your 15% down, your 5% down, and then we do the rest on a second or like a line of credit, to where you're able to avoid mortgage insurance then, and you're getting jumbo rate. I mean, you're getting conventional pricing over jumbo rate. Jumbo rate's going to be a little bit higher than conventional, just for the added risk. We can go down to a 660 credit score on jumbo loans. With jumbo, you usually want to stick around the 43% mark for their debt to income ratio, but we do have a few products that do allow you to go up to 50. It's going to come down to cash reserves, credit score, and stuff like that. Now, one thing I did want to mention, we do offer foreign national loans. We do no ratio loans also, where that's really just the person's credit score. They have to have the down payment, and you have to show a certain amount of reserves. So that would be good for someone that receives an inheritance, that's retired, that doesn't really have a pension, Social Security, anything like that. We can do loans on that also. So another thing I wanted to talk about, you guys, with how competitive the market is getting right now and how it's been. And, with interest rates starting to tick up over the last 2 weeks, they've actually gone up over 100 basis points, which equals about 0.5%, in some cases 0.75% higher interest rate than we were just at 2 or 3 weeks ago. So ways we can help you generate more business is, one, if you're not very active on your CRM, you use HomeBot. HomeBot is this first illustration right here. So it's a monthly email to the person that talks about their estimated value of their home, their values, net worth. You can even use this for buyers too, and they can look for homes, and it keeps them from hopefully getting on Zillow, Realtor.com, other things to look for homes, because they can look at right through a portal that you set up for them. Another tool we have is list reports. It gives a daily shareable. If you're doing as houses are staying on the market a little bit longer now, you might be able to get some more open houses, or for your listings, these create 25-piece marketing kits right when you have the MLS go live. So you have infographics. I know Lauren uses it for her listings, where she puts a binder together so people can look through it when they look at the home. We use Mortgage Coach now, so we can do different loan scenarios for your buyers so they really understand the process. We can use MBS Highway. So this second picture here is our bid over ask tool. This lets them know, hey, if you go over ask, this is about how long it's going to take you to break even. So, they can make that decision. Hey, if you're going to break even in 9 months, yes, it makes sense to go over ask, as long as they have the funds and stuff like that. Another tool we have is the buy versus rent tool. So as you have more people renting, and as rents are going up over the past year and are going to continue to go up, I'm actually making a post about that later today, if you want to check that out, and about how people are just leaving money on the table by renting, or the cost of waiting people think the housing market's about to, we're in a housing bubble. I made a post about this yesterday, that we are not in a housing bubble right now when people compare it to 2008, because it's a totally different time. Back in 2008, all you needed was basically a pulse to get a mortgage. Now there are a lot more qualifications, there's a lot more screening, there's a lot more due diligence done to get people approved. So you have more qualified buyers that can afford to actually get the home that they're going at. But then also, there's not enough inventory now, and that's why prices are going up how they are. Back in 2008, you had too many houses on the market, you had too many buyers on the market, so that's what caused the bubble. So, doing these scenarios like that, talking to people, repurposing the post by a lender and stuff like that can help you be seen as the expert in the area. And two other things that I have is a Realtor Playbook and an Agent Success Worksheet. If you want access to those, just send me an email. Here's my contact information. Tons of videos on YouTube that you guys can use for your buyers or your sellers that just talk about, different parts of the mortgage process, different parts of the home buying process, or even just owning a home that just, like I said before, gets you looking at as a local expert in the real estate world. So with that said, that's basically the overview that of non-QM loans. What questions do you guys have about non-QM loans?
Just in general, what is the biggest challenge that you're seeing for buyers to get qualified right now?
Getting their docs in on time. So
Okay.
Everyone wants a fast pre-approval, and for that to happen, people have to get their documents in. They have to get their pay stubs in. They have to get their W-2s in. They have to get their bank statements in so we can verify the funds. So that's why it's important when you're going to show a house on Saturday and the person hasn't even submitted the application. You call me at 2:00 on a Saturday while I'm at my son's football game or basketball, whatever it is. And you're like, oh, the offer has to be in by 5. Well, if it's a clean file, we might be able to get it done. But if they're, if they get commission or bonus and they're using that to qualify, we need a 2-year average for that. So we need a verification of employment. That can't be done on a Saturday because no one at their office in the HR department is going to answer the phone or be there to do that stuff.
Mhm.
If they have tax returns, we have to look at tax returns. It's not just, if they're 1099 or something like that, we have to look at tax returns if they're not going to go the bank statement route. So that has to be calculated. So I think that's important and people to understand myths about buying. So you might have some buyers that are like, I have to put 20% down. So they're not willing to go over S because they don't have extra funds and they want to avoid mortgage insurance. Yes, mortgage insurance, no one wants to pay something that's not going toward the principal if they don't have to. But if they can go down to 10 or 15% and the mortgage insurance, they have good credit is $60 a month. It's not that bad, but now you have that extra 10 or 5% to go over ask to bring an appraisal gap if you have to. And then if it's not,
finance.
Yeah, exactly. When they get the appreciation, houses will still appreciate this next year, maybe not at the rate that it did last year at over 20% for most of the market, but there's still going to be appreciation because there are still not enough houses on the market. Builders can't make them fast enough. People aren't listing as fast enough because they're worried about finding their next home. So this isn't going to go anywhere where you have to get, you want to work with a lender that can go through those different scenarios and have a backup to the backup plan of, okay, if we get in, this is what we have to do. So having that bid over ask tool, it makes them at ease. If they're like, oh, well, in 9 months, we'll break even and we plan to live here at least 3 to 5 years, then it makes sense. Yeah, go over ask because you're going to make it up in appreciation.
Absolutely.
So doing that route, getting pre-approved with the lender that's going to call the listing agent or send a video on your behalf.
Yep.
Everyone talks.
Does help.
Yeah. Everyone talks about, oh, well, I have a pre-approval letter or a certified pre-approval from an underwriter. A certified pre-approval is great, but if the loan officer knows how to do their job and it's a clean file, it doesn't need to go to the underwriter because the underwriter is probably busy doing loans that are actually in the pipeline already. Mm-hmm. They don't have, unless it's a weird with income or stuff like that, then yes, have your underwriter look at it, but you really don't need to if the loan officer knows what they're doing. It's going to mean way much. So think about one of your listing guys. Would you rather get the pre-approval that says, oh, it's a certified pre-approval that the underwriter checked off, that maybe it's a month old and their situation might have changed, so now those conditions don't matter anymore, or a lender that's going to get on the phone with you and walk you through while the buyer is strong?
Mm-hmm. I appreciate personally on the listing side the video, because I'll be honest with you, we are fielding so many phone calls when we have a listing that goes live, that having that text message that comes through that says, hey, in regards to this deal, open this. So you have a moment. It speaks volumes, and and we can do it in our time and stuff. So it's really great that you offer that as an option.
And it makes your offer stand out. It might not win, but I guarantee you your offer will get looked at 2 or 3 times when they're looking at that video. That if it's just a sheet of paper, you know, and I don't know if it's something that you guys, you know, preach. But what I've seen too is copy the lender on the offer to the listing agent so that we can answer questions right there by email. So it's not just me sending an email that could go in their spam or junk on the behalf. Copy the lender on that. But then what I also see on a lot of offers that get accepted, summarize your offer in the email to the listing agent.
Oh my gosh, yes, guys, yes.
A lot of people don't do that. Put the highlights. This is our purchase price. This is, you know, we're not asking for any of this. Summarize your offer so the listing agent doesn't have to read through the whole thing and they can put you at the top.
And look, we get excited when we see something like that. We're like, "Ooh, wait a minute. I've got to call my client right now." So definitely for sure do that. And it just makes your offer stand out because you look like a realtor that knows what they're doing. You have your lender already on there. So it puts the listing agent at ease that I've seen a lot that they're like, oh, this is a team that works well together. They know what's going on. We're not worried about some falling through. And that's extremely important if you're coming with an FHA, a VA that's not conventional, not a cash offer. You want to do as much as you can to make that FHA or VA deal stand out. Absolutely.
So,
any other questions, guys, for Matt? Everybody's quiet today.
Like I said, use non-QM in your tool belt as a way to get more people. With COVID happening, more and more people went out on their own, went 1099, went independent contractor, opened a business. You're going to see more and more buyers get like that. And like me and my dad own a restaurant. We can't find anyone to come work. You know, a lot of restaurants can't find anyone to work. A lot of your retail stores can't find anyone to work. People are realizing there's so much more they can do now to earn an income since COVID happened with Zoom and stuff like that. You're going to get more self-employed borrowers. You're going to get more 1099. You're going to get more independent contractors where these non-QM routes are going to be a gold mine for you because now you have a lender that can do this financing that a lot of your other people, they might be able to do, but they're going to broker it out. They're going to take the initial paperwork and then they're going to send it to someone else. And you might lose that communication, that streamlined process in there. So since we do that in-house, we do these deals, it's just going to make for a more easier process as we go through.
Absolutely. Well, thank you, Matt.
Yeah.
We appreciate you being here.
Yeah.
And this will be recorded, so those that couldn't get on today can definitely come back and see it as well. So.
And like I said, my contact number is at the end of the slide. So if you have a question, you want some more information, you want some marketing material, Brian, let me write your email down very fast and I'll send you something over.
Actually, Matt, when we get ready to log off, do you want to put your last slide up real quick so everybody can get your contact info? Take a screenshot of it if they haven't had a chance.
Yeah. Hold on. I'm just writing down Brian English Realtor.com. Let me share my screen. There we go. Also, this is a problem. My personal computer is a Mac. My work computer is a PC. So I'm trying to do the shortcuts on my PC that work for a Mac, and then my screen messes up. So
can you teach a class on these shortcuts for Mac? Because I just got one and I still can't operate this darn thing.
Oh, they are the best thing. It's control. I think it's weird when I try to remember now because your hands are just so used to doing it. I think it's control C is copy and control V is paste. That's going to be your best friend.
Well, there you go.
And then like the screenshot is like shift function and like 4, and you can screenshot your screen then and then crop it and stuff like that.
Yeah, I'm going to need a cheat sheet. I think I just need to find it and like laminate
and I just put my cell phone and my email on there. I usually do. So I use 2 emails. I use my Carolina Mortgage Coach email. So if you get on that, I do a weekly email that will talk about a new guideline or a new way for you to grow your business or a new thing to bring up to buyers or a post that you would copy and paste. So I can add you guys to that also if you want to send me an email. My Brady at cfmtg.com is just for all work stuff. And so you'll see 2 emails from me. The Carolina Mortgage Coach is just more of my Gmail account and stuff like that to help just, get content out there. And then my Brady at cfmtg is where I deal with like any of your loans or stuff like that going through.
Awesome. Well, thank you again so much for joining us today.
Yeah. Thank you guys for having me. If you have any questions, don't hesitate to reach out. And like my email says a lot of times, even if I'm not doing the loan for your borrower or you have a listing and you have a financing question, just reach out. I'm here to provide value for you guys. If any of you are on, I think Tommy's having me talk Monday also. So that will be more about everything that we offer at Cornerstone, a little bit deeper with that and a little bit more about the loan process. Is that more for newer agents on Monday or is that for everybody?
So
Okay.
Monday's our rev up program, which is more for the newer agents.
Okay.
Wednesdays are, they're all open for everybody, but Wednesdays are more geared to everybody versus kind of beginner level stuff on Mondays.
All right. Perfect.
Oh yeah. And Brian is hosting on Monday. That's right. Forgot.
Awesome.
Yay.
I'll see you on Monday, Brian. I don't know if Tommy sent me the Zoom link for that one there.
We'll make sure that you get it one way or another. Brian, if you need help with that, let me know.
Okay. Awesome.
Oh, he said
Well,
he's got
thank
it.
you guys. Yeah.
Great,
And
thank
Brian,
you.
I'll send you an email right when we get off and I'll be looking for your email, Presley, and Karen, I'll resend you the Realtor Playbook also.
We all know that feeling. I think Brian.
Oh, yeah.
I'm surprised
Awesome.
my dog's in the room. I'm surprised you haven't seen him yet because normally he makes an appearance. All right, you guys will enjoy your day. Happy Wednesday. Get out there and sell some real estate. Call if you need anything. Okay.
All right. Have a great day.
You
Thanks
guys.
again, Matt. See you later.
All right, bye.
Bye.
Thank you.